Good afternoon, team, and I hope you are all well. Did we have a good weekend? I hope we did. So, this is Mindset Mondays, and in Monday sessions, we know that price action can be relatively slow. Sometimes it's not the case, but most of the time, the sessions are a bit sluggish. We don't have a huge amount going on. So, we thought we'd take that opportunity to give you some Mindset Monday principles. And we're going to be doing this for the foreseeable. Now, the main thing that we want to sort of focus on when it comes to Mindset Mondays is knowing that even though the market moves in its own way and it decides to do its own thing, we only become established within the market if something is given to us. And now we know that what this thing is, and this thing is our rule set. So keeping in mind that just because a rule set is met, it does not mean that it will work. Look at it as if every single thing that you are doing in the market is dictated by nothing more than parameters being triggered. Right? The same way an EA would function, the same way a hedge fund would function, the same way many banks function. Now, just because of a series of movements in the market, just because certain behavior in the market, does not mean that we waver away from what our rule set tells us. So, keeping in mind that a rule set can be a number of things, it doesn't have to be, a specific system. Obviously, if you're using the Orion system, then awesome, you will know what the rule set is for that. But we're looking for a condition to be met, and then we act upon that condition, right? So, keeping in mind that we only act if we're told to, we don't act off of, desperation or hope, is going to be something that you will really need to foster close to your heart and hold in line with your trading system. Now, this will take you away from the mindset of, I need to be in, I need to be out, I must do something, when in reality, you will know exactly when you're going to trade and if you're ever going to trade. Now, again, this is going to be dependent on each person, and it's going to be very personalized depending on the time frame you're looking at, depending on whatever it is that you're looking to trade, the asset, the environment that the asset is currently in. For example, gold is in a very fundamental environment right now, the same as silver here on the screen. But the same thing happens. Just because of this environment doesn't mean that it dictates our behavior within the environment. Now, only executing and behaving in the same way is going to replicate the same outcomes. Now, whether those outcomes are good or bad is obviously down to the edge that you are using. Now, what I'm looking at here is potential for more selling pressure, right, coming in on silver, which would be ideal for us as it aligns with our bias, and we're also looking at a relatively steep incline, meaning that a lot of people are more likely looking to get involved for the buy side of this. Now, regardless of what actually happens, we only have one narrative, and that narrative is to locate the points within the market that we are willing to fulfill this bias. Okay. If we reach these areas, we can then look to follow that principle into, again, an area that we're looking to trade from. So this gives us a clear area that we're looking to trade from. And two, if that area is met and an entry is given, amazing. If it's not, we simply wait for the next move to come. Remember, we're only operating in a mechanical rule set way. Now, I'm not saying that there's a right or wrong way to trade. This is something that a lot of people that are new to the stream, a lot of people that have their own, rule set of trading may get a little bit not confused, but they may think that I'm saying, the way that certain people trade is wrong. That's not the case. The market is completely subjective. Like, it is the most subjective thing. You can read it in any number of ways and come to the same conclusion. You can read it in almost the same way and come to completely different conclusions. So always maintaining your rule set is going to be key to your overall results. Now, as I've said before, trading a system is fine. But unless you have data, and you can personally say you have data, you're trading something that you have no confidence in. period. Now, whether you trade it consistently or not is obviously going to be down to your personality, but always remembering the one thing, which is, how can you say that you have confidence in a system if you don't have evidence to back it up? Now, of course, you could say, well, somebody else has evidence to back it up, that's fine. But how do you know that the pair you're using, the time frame that you're looking to trade it on, the elements you're looking to incorporate, don't shift the principles and shift the narrative of the outcome? You can't say that they do or don't, right? Whereas we need to be able to say with absolute confidence, even if we go on a month's losing spree and we just completely start eating into any profit we accumulated beforehand, we are going to not waver from the baseline of rules that we use. And this, again, is going to be the difference between yourself and somebody that maybe will use a system because it looks good, or use a system because they feel a certain way. We only act on instructions and orders, just like a soldier would, right? We only act on instructions and orders. Whether those orders are correct or not, you will only find out once the market decides to move in any number of directions, but you can only travel in two directions. Now, of course, there is always going to be some sort of genius idea to, replicate something or shift the narrative, or change something within a system, which is fine because you can do that, and that's how systems and rule sets are formulated. But the only reason and the only way you would ever be able to lean on that is if the narrative itself is backed up by a rule set. So keep that in mind. You are free to do with the market whatever you like. You can literally do whatever you like in the market. Even if you decide to come to the market every day and flip a coin, you are still in the realm of probability. Any action in the market keeps you within the realm of probability, but we need to make sure that that realm of probability is going to stay with you regardless of what price action occurs. So remember this, right? If you have a coin flip sort of approach where you come to the market, you flip a coin and you sell or you buy, you are going to have, at the end of the day, the probability of 50-50, but the possibility of every single coin flip you take over the period of, I would say, around 10 flips being incorrect. Right? Just because a probability is 50%, that does not mean that if one thing happens, the next thing is likely to happen. Look at it like a casino, okay? If you're looking at a black and red on the roulette wheel, just because black comes up 100 times, that doesn't mean that the next one it's more likely to be red, because the probability remains consistent across the actions within the roulette wheel. So the days that the markets make the most money is when ultimately they're just moving in a direction and people assume that they must sell. It's the same way as a casino. The nights and days that they make the most money is when you see black consistently come up and you see red consistently come up, and people will begin to hedge the probability of that when the probability never changed. The probability has always remained the same, and it always will remain the same. So you have to keep that in mind. Now, we do have a couple of new additions here. We did have a late night Friday entry there, which unfortunately it got to around 7 p.m. and I closed out with like pretty much no profit on that. It was like a very minor, I think it covered commissions and a little bit. It was like 0.5, 0.6, but that's fine because I'm not trading it into 9 p.m. on a Friday afternoon. But again, it's the same thing. Our execution was given and we sat with that, right? So if it decides to continue going up from here, awesome. If it doesn't and it decides to sell off, also good. We're looking for a bearish narrative to come into play now. But what are we doing here? We're executing based off of what we see in the market as actions being fulfilled. Whether those actions represent orders, whether they represent the introduction of certain data pools, so for example candles, or a certain pattern if you were within the market. Everything is pretty much sourced around patterns, but what they represent is of course unique to each system. So whatever you're following is always going to be down to the same thing. Does it represent what your data is backing up? If the answer is yes, then you should be involved with that move, okay? Unless your conditions that you already have preset tell you otherwise. And those conditions generally are the only, how do I say, the only variables, if you were, that will dictate your decision making. But a lot of people will allow emotion to become that variable, which then changes a vast amount of actions in the market. So let's say, for example, an entry is given here on gold. I don't believe, there might be a gap, I don't know. We'll check in a minute. Let's say that this entry right here, and then we trade it down to here, right? Awesome. But let's say for whatever reason someone looks at this and they say, don't like the way the market is, not liking the way this trade looks, whatever, we don't take it, right? And then price comes in, tags us and goes down to TP, awesome. And then they take it. Flip the coin and look at it as, let's say it's not valid. So for example, price runs down and creates a 1 to 2. That 1 to 2 is met, and someone says, well, I still like the look of this, even though price has come down, and they trade it, come back up, and it fails. The only reason that the outcome has been different on those two setups is because you've allowed yourself to be dictated by how you feel, when in reality we should only execute based off of what we're told. And if we're told something, we listen, right? Take the advice of your system, and if your system is backed up by data, you will blindly just follow that rule set and check your parameters around it and say, okay, yep, that's cool, I'm happy to follow this because I know that X, Y, and Z have been met. So separating yourself from the idea of how do I feel about this trade or what do I think about this trade is going to do the world of good to a lot of people. Now, yes, you have to always consider this. If you're building data on one pair, so let's say our pair is gold, okay? So we're building data on gold, and we have gold as our primary test subject. And the outcome of this is that on gold, we took a maximum over the space of 2 years, for example, of, let's say, 5 consecutive losses, which is very realistic, right? 5 consecutive losses on gold. Add that into a plethora of pairs, okay? And that becomes 5 on its own. Then you have the results you have on GU, the results on EU, the results on USHEF, the results on NAS 100, the results on all of this. And if all of them add up to 5, then there is a chance that every single one of these could be running at a 5 consecutive loss streak at one go. Now, again, this does not mean that you should shy away from trading more than one asset. No, but what it does mean is that realizing a lower risk tolerance may be better if you're trading more pairs, because ultimately the only reason people trade more pairs is to have more consistent trades, right? When sometimes quantity is not what you're looking for. You want to look for quality over quantity. So having a small risk tolerance, understanding that you could suffer a loss consecutively on the pairs, and then adding the consecutive loss probability up, is going to give you a lot more realistic in terms of, okay, I lost the trade on Friday, I lost the trade on Monday like this, right? And then this was technically a win, so that would come into the probability of wins there. How do we ultimately dictate to ourselves when we should or shouldn't take the next trade? Well, we always follow the same thing, the rules, right? Always the same. You don't allow anything else to dictate you except for the rules. So you just trade based off of the probability, and if your probability is low, use risk that will align with that. And the main thing always comes into play, right? If you're trading something on multiple pairs, whatever your data collection is, you have to have data on each pair. If you collect data on one asset, that's a USHEF stop loss right there. It's a great example for a Monday. If you're creating data on one asset, then it only applies to that asset. So you should only be trading that asset with the mindset of, I may take 5 consecutive losing trades in a row, and so on, right? So really, really drill it into your own mind that unless I calculate this numerical probability, knowing that the outcome could be X, then you're always going to have a buffer in the way, or something in the way, which is ultimately going to sway you, and you're going to become emotional, right? Simple as that. And even if you have a 0.1 entry criteria, right? You may look at 0.1 and say, well, that's, complete bullshit. Well, if you're using a higher risk to reward basis, then that can work very nicely. If you're using a lower risk to reward, then you can of course keep the risk tolerance a little bit higher, only if it aligns with the consecutive losing or confluences that you have in terms of what your system is telling you. So when it comes down to taking like this, right? A loss straight out the bat on Monday. We took an L straight off the bat. Okay, cool, whatever. We move on to the next point. This becomes one in the tracked database of whatever it is that you're looking to trade, whether it's U-Chef or the indices, whatever it may be. Great example of this is the reverse. When we had Monday morning last week, we had a tap and run straight off the bat, like 6 a.m. Yes, it didn't get to TP, but that doesn't dictate whether that's technically a winning or consecutive losing trade. Remember, this is something else that you need to factor in. When you're gathering your data, again, if you're using like FX Replay, which we have a partnership with, if you want to get 15% off, you can use it with the link down below. If you're using FX Replay, they will show you like the probability, or not probability, sorry, how much profit you could have had and how much profit you actually secured, how much you lost from the profit you made, and so on. Excuse me. But if you're not using a system that allows that sort of intricacy of data, then the main thing that you need to do is work out that yes, you may have, let's say, 5 consecutive winning trades, but 2 of those could technically be a minor BE where you're covering commissions that would still come under the winning trade criteria. So always make sure that your data backs up what you're doing. And if you don't have data, stop trading and collect that data. Because not long after you've collected that data, you'll be able to turn around to yourself and go, okay, right, I prefer X, so I will adjust to meet X. I prefer Y, so I will adjust to meet Y. So you're always going to have leeway on both sides, whether you want to adjust an existing system, whether you want to trade with criteria that's not in this system already, and you're making a new system. It's always going to be unique to yourself. So we're still looking for bearish on GU, we're looking for bearish on EU, we're looking for bearishness on gold. It looks like we may see bearishness on gold. We're also looking for bearishness on NAS 100. We're looking for bullishness on U-Chef. Remember, just because we took this L here doesn't mean we won't trade it lower down. And again, this is another thing. Let's say this trade, for example. Many people may look at this and say, oh, okay, well, you know, this is a 4-hour low, or this is a daily low, daily high. So you're in the premium of a range. If your system you're trading tells you that, that's fine. Unfortunately, you can't guarantee or dictate whether price is going to tap into here and just run and take the high, like we expect it to, or if it's going to seek liquid lower and then come higher. Only your database can tell you that. And if you have a database that tells you, yes, X and Y should happen first, then you can trade that off your own basis. But you can't apply your own concepts to someone else's system, purely because your data may suggest to you that you shouldn't take a trade there, when someone else's data may highly suggest that they take a position somewhere, right? So it's always down to the same thing. What does your data tell you? Always the same. So again, do I care that this has gone to stop loss, that we took 0.25% loss this morning? No, I don't. On to the next one. This is why sometimes if your system has a higher probability of consecutive losses and your drawdown may be slightly higher, you can either do one or two things. You can either reduce your risk to allow more tolerance, or adjust the amount of pairs you're trading and then gather the data based off of that. So, where are we? Where's Bitcoin? Let me go over to Bitcoin. So Bitcoin's a great example of a bit of fundamental price action here, which is something you can't really dictate with a trading system. Now, the reason I say this is because this would fall into the fundamental realm of understanding the direction of the market. If you use fundamentals, awesome, you may well have picked up on this, but it was a bit of a spur of a moment action. So it was Donald Trump on Sunday decided to speak on cryptocurrency, and it caused an exponential push to the upside. Now, just because he said one thing and it caused crypto to pump, remember, the actions of the market are ultimately a reflection of the people that invest in them. And if somebody of influential power says that, the US government, which is one of the largest and most powerful governments in the world, not the largest and most powerful, but one of, you could argue that they are, but again, we're not going to get into that. Are people going to react off of that and buy based off of what's said? Yes. So I think you have to be very careful when you're looking at fundamentals, because something like this can cause a bigger move than any actual news outcome in terms of pre-planned news. But there's always, on the, how do I say, the live sort of reporting where you can pick up on these movements, right? Now, I'm not saying, you could have traded this if you was watching Trump talk, but a data-driven edge is not going to predict that, because it's not something that is following a data narrative. It's following a human narrative, which is emotions say, and knowledge tells us that if somebody of power suggests that a market is valuable, then the value of that market, in theory, goes higher. So I'm coming down with a little bit of man flu, I think, at the moment. Which is not good. Now, I don't know if anyone else has this, but LinkedIn is literally the most spammiest, marketing-ridden, platform ever. On a daily basis, I receive, multiple different messages saying, oh, do you want to do this, or do you want to do that, or I'd love to call, and I'm like, I don't understand why people think that just because you're on LinkedIn and it says something like CEO of so and so company that isn't actually a registered company, people are actually going to buy into that, and drop ship, and not drop ship, but jump ship, and just change what they're doing, because we all know that ain't really the case. So again, chef, straight L there, straight out of the bat from Monday. We still need to update the report from last week. I think, if I'm not mistaken, we were just in the negative last week. Let me double check. Yes, just in the negative. So around not 0.3, because we're not looking at percentage, around 3R, give or take. Again, we're using the 3-point methodology, which is price either TPs, BEs, or stops you out. Excuse me. Because when you start to partial, each trade is going to have its own different environment, which is going to dictate what kind of partials you take where, how much the RR is going to be. It's going to reduce your overall outcome. Same thing applies, right? If you have something that gives you a reason to do a partial, so for example, you use the methodology that we teach, which is using structural points and understanding the narrative of market to partial out and secure yourself, then this trade would have been a different outcome. For example, we had a high, price came back up, tagged that high, you would have been BE and partialing here, which would only have given you a partial of around 1.3 is where you would have been partialing. So it would have cut the initial, or not the initial, but the potential for that trade almost in half. Now, yes, it ended up being a stop loss trade. That's fine. We know that the -1 is indicative of the rule set we're using. So that is a bearish Orion entry on gold. Right there. Do we have a gap on the broker? It looks as if we do. God, I feel rough. Now my spread is not looking great right now. Definitely getting the lurgy here. Definitely getting the lurgy. Okay, something you need to make sure you always check before you get into a position is obviously the environment of the market that you're in. And the environment currently is clear of red folder news, so that gives us a red flag. Not a red flag, sorry, a green flag to look to follow the principles. Okay, remembering that 2R is the limitation for a trade, which we are actually at already. So the validity of this is going to be dependent on whether you're using the 2R rule set of if a trade's greater than 2R, whether you take it or not. I'm going to see what price does here. If it decides to push back down again, I'm not going to be involved with that. The reason I say that is because it extended to 2R before the actual entry was given. The entry has only just been given now. If you decide to take it as well, that's completely on you. But again, I'm not telling you what to do. This is not a signal service. Follow your own rule set. And if you don't have a rule set that has data backing it, then you're trading something that you shouldn't be playing around with, essentially. Now, you may be noticing that the colours, some of these candles, have different colorations in them. They have slightly different colours. Some of them are darker than others. And that is ultimately incorporating a volume principle of higher than average volume means more probability if you're tracking a market in a given direction. So for example, you can use higher probability areas with more confidence, even though the system you use already backs up what you're looking to do. It's just another confluence that can be added, especially on some smaller time frames. So we'll see what we can do with this. We'll put a little alert here. Again, if this comes up and takes us out, it literally doesn't matter. We leave the rule set the same. Nothing changes. Nothing changes. Now there is something that I'm not seeing, which is okay. Yeah, there we go. You can see the entry here that I was talking about. That is not a valid entry, by the way, if you're wondering. Why isn't it? Well, it hasn't swept anything to confirm. Okay, remember, gold is super fundamental right now, so there is a high chance we could just take off to the upside. So be it. So we're still looking for a gap to open up here. We're looking for more of an expansion to the upside on that's 100. U-Chef giving us a very clear indication it's looking to seek liquid lower. Wait for Orion to load and you'll see the areas we're looking at. Here we go, we're looking at this point here. Price to come down, take this out. If it does, awesome. If it doesn't, so be it. Why is that opened? Right, what's the time here? Time is 1:35. Let me double check. 55 minutes till we got Canadian news. UJ looking for bearish, so there's potential for we'll see actually. We shall see. So remember, what your bias is going to be completely dependent on what your system tells you. Oh, definitely getting the lurgy right now. Let's go over to oil and see here. Remember, we still have the report to do from last week. We will be updating that this afternoon. Excuse me. We're biased here on AU. Holy, I'm freezing. Same thing here. It's been that time of year. My son's literally just got over being ill. Also, I don't know if anyone's tracking the pi, but pi actually came down again right into like 1.5, 1.4, and then pushed back up again. Now it was up at like 2.9, which is pretty impressive. But nothing is actually coming of that at the moment. Euro here. GU. Same thing, gold sitting around there. See if it wants to trigger us in. Let's put another alert here. If I can, that'd be great. Cool. God, I'm freezing. It's not actually cold in my house, but I'm actually cold. So we're going to be doing some TradingView sort of walkthrough tutorials very soon, which I think will be helpful to some of you guys. Obviously not many, because a lot of you are very fluent in the TradingView platform, but for the ones that aren't, it should be a useful sort of tool. Or at least I think so anyway. I'd like to think so. That's the only thing with this new build. Compresses your chart down to nothing, so you can't see anything. As I've said before, we've got alerts, so we'll know if something goes on. Just the same as if gold comes up to where we're looking to sell it from, we'll know. Let's go over to the sentiment here. Have a little peekaboo, see what's going on. So gold is an exact 50-50 bias right now. Exact 50-50, which is interesting. I would agree that most people are probably buying it, to be honest, because of where it sits. But whether that's actually going to represent the price action or not is a different story. GJ, a little bit extended. UJ also, that's potential there. Gold, not like it's not reaching that point. Just remember what I said, if it comes back down to here, then we're not bothered about that. We're just going to let that do its thing. USHF also having a little reaction around this lower point here. We'll go back to the 4 hour. You'll see we don't have a low until a little bit further down. Remember, the mindset is always the same. Do we care if we take a loss? No. Something that you have to think about as well, right, is I know a lot of you trade funded accounts. Funded accounts are a good business model because they're fundamentally rigged to make 90% of traders fail them. Doesn't mean that you will. I'm not saying, I'm not trying to say, funded accounts are this, that, and the other. I utilize them as much as anyone else. But especially some of the sort of tighter tolerances ultimately are going to be unsustainable for most people if you're trading more than one pair and you have anywhere near to like a 60-70% hit rate. If you're using 1% risk, actually, I need to disclose that if you're using 1% risk. Even using like a 0.25% risk, let's say you're trading 4 pairs, and you've got data to say that you can take 3 to 4 consecutive losses, times that by 4, that's your overall consecutive outcome. Again, that's going to be dependent on what kind of time frames you've tested that over, in terms of have you tested it over a year, a month, a week, a day. I hope everyone had a good weekend, by the way. I hope everyone had an amazing weekend. Whether you spent it with family, whether you just stayed at home and relaxed, whether you were out and about, whatever it is you chose to do, I hope you enjoyed it, took your time to unwind, get yourself geared up and ready back to just react as you should in the market. Looking like we're going to come back down and hit the 2R mark right now. So if we do get triggered into this, our target is here, which gives us a 6.7 at 2. Which is cool. If not, then it is what it is. You take a loss, right? If we hit this marker that we've got set in place here, then we cancel the order and we move on to the next setup, which I believe could be this. GJ, possibly. It's a little bit extended from what I'm looking at. I mean, if we look at how far we are above, we're sort of 1, 2, 3, 4, 5, 6, 7, 8. Ultimately, we wouldn't. Yeah, it's a bit tricky. But I would still look to possibly get involved with the short there. I'd just use a little bit less risk. Gold actually pushing lower here. This is a bit annoying, but again, are we going to just enter now because it's slightly annoying? No. Unless we hit the alert to remove our order, or we get the ping telling us that our order's been triggered, we sit around like lazy employees. Put your feet up, go and get yourself a coffee, go and get yourself some food, play a video game, whatever it is that floats your boat. Whatever it is that boats your float. Remember, the latest Trading Thoughts video is now out. If you want to go and watch that, you might find some value in it. You might not. You might watch it and go, this is complete dog shit, which in that case, that's fair enough. Everyone has their own opinion. So guys, there is one more seat in the current mentorship program. There's one more seat. Money out detected on UJ. For our time frame, we're taking out this high volume high. There's your money out. Awesome. Let's make sure we don't have anything conflicting our potential for entry here. 44 minutes until news. Remember, you can choose what kind of news buffer you put on it, but you must make sure you apply that through your backtesting so it's reflected in your results. Okay, now I believe we haven't quite come down to that point yet. That's cool. Very flat top there. Probability of being swept is, I would say, reasonably high. Not really any volume in the market there, but we will give it a go nevertheless. GJ being one of the tighter spread pairs that you will come across in most Forex brokers, not all, but most. I have a pretty bad headache right now. What on earth is that? Okay. Cool. Pretty bad headache. Apologies for anyone that's watching this. I'm not really being the most active. Take profit being the nearest low that we have here on the 4 hour, which will bring you down to here. It's a 10 hour trade. We need to set the 2 hour tolerance point, which would be around there. Move it up slightly to meet that. There we go. Gold looking like it's going to hit our alert before it does anything. Again, we just sit and wait. GJ? Is that also triggered in there? Right now, I can't tell. Yes, it has. Mid-volume high taken out right there. Let's see if we can get a... around there. Holy, I feel very, very sick now. Might have to wrap this stream up a little bit earlier than I wanted to, guys. I've shown you the entries. I've shown you what I'm looking at. If they fulfill, they fulfill. If they work, they work. If they don't, they don't. If they get cancelled, they get cancelled. But this looking like it's going to come down to cancel. GJ. We've got a bit of a distance to go on GJ, but we'll see. Gold coming up potentially for a tap, but let's see. Okay, UJ crossed, so we can get out of UJ because the rules have been met, and we just simply follow what they're telling us. So UJ is a cancel order right now. Right, guys, I think I might actually finish the live stream here. Gold's still messing around in here. Remember, the order's set, so it is what it is. At the end of the day, if it taps in, cool. Same with GJ. We'll just see what happens with that. But I'm gonna wrap it up here, I think. It's been a pleasure. I appreciate all of you that joined me today. I know no one's been in the chat, but that's fine. I'm here for you guys to absorb the information I give you rather than you interact with me. But if you feel like you want to, that's completely fine. I appreciate every single one of you. If you want to join the Discord, you can. I may be hosting a free session today. If we don't host a free session today, then I will host it tomorrow instead, as long as I feel up to it. But yeah, I appreciate every single one of you. Make sure you hit that like button if you haven't already. Hit the subscribe button. I'll see you all in the next one. Peace and love, guys.